This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Happy Friday, folks. Looks like we made it. We're not quite done yet, though. We've got a market to wrap up on this Friday. Very good afternoon. Massar, Tim Stenovec, live here on Bloomberg Businessweek Daily. We do, Tim, have a broad break. Blah, 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 blah. Easy for you to say.
I'm just sitting here with my mouth closed. I'm letting you do the talking.
It's a broad-based rally. I'm looking at 462 names in the S&P 500 higher today.
Yeah, that rally being pushed on by a redhead from our Bloomberg terminal for Bloomberg terminal clients. The Trump team internally floats selling Nvidia H200 chips to China. Shares of Nvidia right now moving higher on that news, up 1.3%.
I love that you said redhead, because that's a redhead. An earlier redhead today came from a member of the Federal Reserve. In fact, it was the president of the New York Fed, John Williams. He gave a speech earlier today at the annual conference of the Central Bank of Chile.
I view monetary policy as being modestly restrictive, although somewhat less so than before our recent actions. Therefore, I still see room for a further adjustment in the near term to the target range for the federal funds rate to move the stance of policy closer to the range of neutral, thereby maintaining the balance between the achievement of our two goals.
Yes, indeed. That is the president of the New York Fed, John Williams, earlier from Chile. Obviously a key Fed official, and the market right off the bat got an injection of hope thanks to that comment by him. And we have been off and running, broad-based buying, if you will, across the board. So having said that, that's our backdrop, Tim, and we've got a lot going on this hour.
We do. Speaking of the economy and trying to figure out where we are, what the 3A pillars are telling us about the U.S. economy and markets with the person who came up with the way to look at it.
You know, we talk so much about K-shaped economy. I'm kind of obsessed with these 3A pillars. Hey, we're also going to get into geopolitics, including the latest on the U.S. position when it comes to putting an end to the war between Russia and Ukraine. A deadline has been given by the president. Sounds like it could move, but nonetheless. And then we've got the upcoming G20 meeting about to get underway while the U.S. is bickering with this year's summit host. What you need to know.
And the holiday travel season is upon us. Pittsburgh International Airport CEO joins us on holiday travel and a new makeover that's more than a decade in the making.
All right, all that to come. First up, let's get to that rally on Wall Street. Let's toss it on over to Charlie Pell.
All right, thank you very much. Here's what you need to know at this hour. The Dow, the S&P, NASDAQ all advancing, but big news moments ago out of Nvidia, out of Washington, actually. Now, sources tell Bloomberg U.S. officials are having early discussions on whether to let Nvidia sell its H200 artificial intelligence chips to China, a contentious potential move that would mark a major win for the world's most valuable company. Now, Nvidia shares right now, they are pushing higher. Right now, Nvidia up by 1.4%. The S&P up 100 points, up 1.5%. The Dow up 1.6%. And NASDAQ up now by 1.6%. Our Mag 7 index up 1.6%. Nvidia, of course, part of that index there, with, again, Nvidia shares up 1.5%. 10-year right now at 4.07%, with a 2-year 3.52%. Gold up 0.2%. The precious metal up $7 the ounce to $4,084. West Texas Intermediate crude oil down 1.9%, $57.89 a barrel. And Bitcoin, big story there, 84,487. Right now we got Bitcoin down by 3.1%. Cathie Wood's flagship fund was buying Nvidia yesterday following the company's blowout earnings, reiterating her firm ARK Investment Management's bullish stance on the chip bellwether. Again, Nvidia shares up 1.5%. ARK up by 2.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Massar along with Tim Stenovec, live here at Bloomberg headquarters. Well, we've been dying to talk with our next guest ever since Bloomberg economics editor Chris Anstey wrote about President Trump's economy being propped up by AI, affluent consumers, and asset price gains, or the so-called A-Pillars Foundation. Now, Chris wrote about it because of the work done by Greg Daco. He is chief economist at EY Parthenon, who said recently, quote, "The economy remains resilient on the surface, but it's increasingly dependent on three narrow interconnected A pillars: affluent consumers, artificial intelligence, fueled investment, and Tim, asset price gains." It is something we keep talking about a lot here at Bloomberg.
Great to have Greg Daco with us. He's chief economist at EY Parthenon at Ernst & Young, where he leads thematic research on the global economy, central bank policy, and fiscal policy. Greg, when we talk about different frameworks to try to describe the economy, we talk a lot about the K-shaped economy, the consumers on the top and the bottom. Now adding to the mix the A Pillars Foundation. Lay it out for us in your own words.
Yeah, I think there's been a lot of talk around the K-shaped consumer spending outlook, but it's broader than that. The economy is K-shaped. We're seeing greater degree of polarization in terms of the different drivers of economic activity. And what I wanted to reflect with the three A pillars was essentially that we have a narrow foundation to economic activity, which is currently going through a virtuous cycle because all of these pillars are interconnected, but there are downside risks if any one of these pillars starts breaking apart. The idea is that essentially we have optimism around AI. We're seeing a lot of capital investment that is supporting economic activity. About a third of GDP growth in the first half of this year was driven by AI investment. Wow. Data centers, investment in semiconductors, software, R&D, all driving economic activity, which is very good. There's been also a lot of optimism in terms of the stock market that has been driving up valuations, but it's been a K-shaped outlook when it comes to the stock market. Not all firms are created equal in this environment. There's some investment that is just out of the fear of missing out here. And then that is in turn supporting a greater wealth effect, which is gradually supporting more spending by more affluent consumers. The less affluent consumers are less invested in the stock market. They're not benefiting as much from that. This is all very good, but if there starts to be doubts around the prospects for AI, if there starts to be a bit of a pullback in investment or pullback in some of the big names on the AI front, what effect does that have in terms of the wealth effect, the confidence effect, even for those that aren't invested in the stock market? It could actually lead to a pullback in consumer spending activity.
That's a lot of questions, right, of ifs in terms of how it plays out. I think of foundations, Greg, and there are different types of foundations, and some can withstand a lot, some cannot. How strong is the foundation, in your view, of this AI spend, which has led to higher asset prices on all things connected AI, and then ultimately, leads to those asset price gains and people spending, especially among the wealthy, who are mostly in the market or some other kinds of investments?
I think one of the things that we talk to a lot of clients about is this notion that we are increasingly in an environment that is driven by supply side dynamics. It's a very different economic environment, a very different economic paradigm than what we've been accustomed to for the past few decades. And when I say that, people start to perk up and ask, what do you mean by that? Right. And what I mean by that is that over the past few years, we were accustomed to an environment where demand side dynamics drove economic activity. Now it's all about supply shocks. It's trade and tariff policy. It's immigration and demographics. It's climate change and weather disruptions. It's the AI revolution that is lifting supply. And the reason why that matters is because those supply shocks have counter-cyclical effects on output and inflation. On the one hand, they tend to lift output and reduce inflationary pressures if it's a positive supply shock. Right. But if it's a negative supply shock, it does exactly the opposite. It reduces your potential supply and increases inflation, which is stagflationary. We talk about that with energy and power and the AI draw and higher electricity prices.
Greg, does it feel like to you that since you coined this framework, the foundation when it comes to artificial intelligence fueled investment has become more questionable? Has that, if you think about it like three legs of a stool, is that stool getting weaker?
It's not getting weaker, but it is an environment where there are certain doubts as to how much of the investment is viable, is actually productive. There are two strands of investments when it comes to AI. There is essentially the foundational aspect, developing the infrastructure, developing the software, developing the cybersecurity element, developing the data centers. All of that is real investment driven towards supporting this technological revolution. There is also corporate adoption. Right? A lot of firms want to be ahead of the curve. A lot of questions that we get are we behind the curve? Should we be investing more? And the fear that I have is that sometimes this FOMO sentiment leads to inadequate capital allocation, where essentially we're just spending money on AI, but what's the real end use? What's the productivity gain down the line?
Which I have to think all of this, and also, most recently a lack of data, is going to make this so tricky for the Fed. We do have the last Fed meeting coming up, of course, mid-December. Fed Governor Stephen Miron joined the Bloomberg surveillance team earlier today. He, though, continues to support the idea of more Fed rate cuts. Let's listen to what he had to say.
The lack of data doesn't mean that we don't have a forecast. We did have a forecast. All it gives us is opportunities to falsify our forecast. And there hasn't been anything in the data, in the news, in media stories, in private sector data, alternative data that's available to us, that would make us think that the forecast is somehow nullified and there's been a big shock to it. So if anything, all the information that we've got in the interim since September FOMC has inclined to the dovish side.
All right, that, of course, was Fed Governor Stephen Miron earlier on Bloomberg. Greg, we're talking with Greg Daco, chief economist at EY. Is he right?
I think we're increasingly in a polarized environment within the Fed itself. The problem is that the data does not confirm either situation, either position. What we really have is essentially Fed policymakers trying to answer three questions. One, how persistent is the inflation shock from tariffs? Two, how weak is the labor demand side of the picture? And three, how close are we to neutral? And there aren't just two camps. It's not a doves versus hawks type of situation. There are multiple factions. Some are closer to the middle, some are a little bit more dovish, some are a little bit more hawkish, but it's not like you have a clear-cut picture. And the minutes reflected that, right?
Right.
Most policymakers want to see further easing of monetary policy. Several are in the camp of essentially doing a rate cut in December, but many are opposed to a rate cut in December. We don't know who are the voters amongst those, but it essentially leans towards no rate cut, despite the fact that we don't really know who is sitting where in terms of the voters.
In your view, which of the Fed's dual mandate? Which of the Fed's dual mandate? Yeah. Which side do you think the Fed needs to focus more on? Does it need to focus on price stability or maximum employment?
I've been very sympathetic to the view of Governor Waller. I think for the longest of time, he has been actually on the right side of the narrative right now. Mm-hmm. What we've seen are a few things. One, we've seen the pass-through from from tariffs into inflation that have been rather gradual and uneven. That means that we're going to get a one-time shock. It's not going to be a persistent inflation shock, but it will affect price levels and cost levels, which is a deterrent to private sector activity. But two, the labor market seems to be softening. I'm more in the camp that what we've seen in terms of payroll growth slowdown is an indication of the labor market demand side of the picture slowing faster than the supply side of the picture. And I think the latest employment report points in that direction. The keynote here is that the unemployment rate rose while the participation rate rose. So it wasn't a supply story, it was a demand story. And in a softer labor market, you get less wage pressures and less second round effects, which is disinflationary and actually would argue for the Fed having room to ease monetary policy further.
We got to run. Come back. I'd love to continue this conversation. Greg Daco, he is chief economist at EY Parthenon at Ernst & Young, joining us right here in studio. We're going to kind of stay with this, but kind of get into a little bit more of a global view on investing. Geopolitics, Tim, definitely back top of mind. Yeah,
this as President Volodymyr Zelensky said Ukraine risks losing its key partner after the U.S. threatened to cut off support unless Kyiv agrees to a peace deal that would force it to cede territory to Russia, cap the size of its military, and pledge never to join NATO. And also on the geopolitics side, the president and U.S. officials are having early discussions on whether to let Nvidia sell its H200 intelligence chips to China, Carol. This according to people familiar with the matter. Yeah, it's a lot for global investors to kind of take in, figure out strategy going forward. Let's head to France, to Paris, and to Raphael Thuin. He's head of capital market strategy, is at Tikehau Capital. They've got roughly $59 billion in assets under management. Raphael, good to have you back here on Bloomberg Businessweek Daily. You joined the team here back in July. A lot continues to happen. How have things changed for global investors in the past 4 months? And is there more clarity today in your view?
Well, it's been a good ride, obviously, for investors this year. A very resilient market on the back of resilient macro, resilient earnings, monetary policy, which are going the right way for investors. And so broadly speaking, there is a lot of anxiety about tariffs, about what's going to happen with the AI bubble and about geopolitics. But if you zoom out and you look at the fundamentals of the market, they've been broadly positive. So, looking forward now, it feels like it's still a very good time to be invested.
What of those three things that you mentioned, which one is sort of the biggest risk?
So looking forward 2026, we kind of see a reacceleration of growth, both in the US and in Europe. We see in Europe, especially the effect of the German stimulus coming into the real economy. It does feel like also there is some momentum with the US economy, although we will talk about the K-shape aspect of it. Maybe on the monetary policy front, though, there are still doubts, and we can see that with the swings in interest rate in terms of how much interest rate and prospect we should have towards Fed cuts. And here, maybe on that front, there is a risk. In our view, we feel that inflation is a bit more stubborn than what it looks like, a bit more structural, that there will be a very difficult time for the Fed to really go through all those cuts leading to neutral territory. And it's true that the market might be a bit ahead of its skis when it comes to monetary policy.
Hey, one thing I want to ask you, Raphael, is, we were looking at markets, and I know we were talking about this throughout the year, some outperformance that we have seen when it comes to various markets over in Europe. The FTSE 100, though, the DAX, both outperforming the S&P 500 year to date. And I think at one point during the year, we did see global markets in general outperforming the U.S. What's the outlook for those markets? How are you looking at them in comparison to what we might get from the United States? What are the catalysts that could either create outperformance of those markets versus the U.S. or possible underperformance?
Yeah, it's been quite a few months of relative outperformance of European assets, broadly speaking. So this comes on the back of the last 5 years where we had massive outperformance of the US. If you take for every dollar invested over the past 5 years, 80 cents were invested in the US. So we kind of see a rebalancing of those flows now. Obviously, the dollar collapsing has had tremendous effects on global investors. People are reconsidering a little bit their allocation, rebalancing a little bit towards maybe some more Europe. And looking at the fundamental picture for Europe, it's easy to be cynical. A lot is wrong. There is a deficit of growth, of competitivity, political fragmentation. I'm sitting in France right now, so I can tell you about political instability. But at the end of the day, taking the broad picture, once again, a reacceleration in terms of growth. Probably the market might be underestimating the impact of the German stimulus for the months to come. It is very powerful, and it should trickle down into the real economy in many ways. And looking also at the valuation discount, a lot is in the price. The gap between the US and the European market when it comes to equities is the largest ever. So it doesn't mean you cannot invest in the US. Obviously, this is a big part of the allocation, but rebalancing towards more Europe when you have those tailwinds blowing is probably a good idea.
Hey, Raphael, we only have 30 seconds left, but we've been focused a lot this week on private credit and concerns within private credit, at least here in the US. How is that, in your view, an issue or a challenge or a risk in 2026?
Yeah, it's been on investors' mind for sure. So, we manage more than 25 billion euros of private credit. So we see a lot of what's happening. We've had obviously idiosyncratic stories around First Brands, around Tricolor, which were like very specific stories. It doesn't really reflect what we see on the ground.
Okay.
We do see on the ground somewhat of a deceleration in some credit quality, but we don't really see a systemic risk brewing.
Yeah.
We will monitor that closely.
All right, we're all keeping a watch on it. Hey, listen, so great to catch you before the weekend begins. Raphael Thuin, head of capital market strategies at Tikehau Capital. Coming up next, we get into the G20 meetings. They're about to get underway in South Africa, and already the U.S. is in a feud?
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the day right now on the S&P 500 index, on track for a losing week. However, on the week right now, looking at a loss of 1.16%, but stocks higher as of now, again underscoring best level of the session. Traders driving stocks higher at the end of a volatile week that saw some of the most speculative corners of the market getting whipsawed, testing investors' nerves after a relentless rally. Here's where we stand. The The S&P 500 index is up 118 points right now. That is a gain of 1.8%. Dramatically different tone to this market than this time yesterday. The Dow up almost 800 points now, up 1.7%. Nasdaq Composite Index up 448. That is a gain of 2%. Our Mag 7 index now higher by 2.2%. Nvidia, key member of that index, Nvidia shares up by 1.6%. U.S. officials are having early discussions on whether to let Nvidia sell its H200 AI chips to China. 10-year, 4.07%. Spot gold up 0.2%, 4,087. West Texas Intermediate crude down 1.5%, 58.11 a barrel. And Bitcoin now down 2.8%, 84,793 on Bitcoin. Tesla is being sued over a fiery crash in Washington state that left one person dead and another seriously injured after rescuers allegedly struggled to open the vehicle's doors, the latest in a growing body of litigation scrutinizing the company's electrically powered handles. Tesla did not immediately respond to a request for comment. Tesla shares today up by 1.5%. Again, recapping, we've got the S&P 500 index up by 1.8%, Nvidia advancing 1.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, the Group of 20 or G20 meeting gets underway this weekend. South Africa is hosting the summit this year. It was supposed to be a showcase for the continent on the world stage. Instead, this year's host, South Africa, next year's host, the United States, spent a lot of yesterday trading barbs over what exactly constituted participation, Tim, in the conference.
And so what read at times as a farcical diplomatic dispute over semantics underscored some of the deep divides plaguing this week's meeting and threatening to undermine a preeminent global forum. It's also raised the prospect that potentially no African countries could be invited when Donald Trump hosts the gathering next year. For more, we turn to Bloomberg Television's chief Africa correspondent, Jennifer Zabasajja. She'll be at the G20 summit in South Africa. She's also the host of Bloomberg Next Africa. She joins us from Johannesburg, South Africa. Jen, the meeting about to get underway, as Carol mentioned. We have the Bloomberg Next Africa newsletter, and we noted in that newsletter that the summit this year risks being a dud. What's going on? Why is that?
Yeah, Tim, I think it depends on who you're speaking to, really, right? Because throughout this whole G20 presidency that South Africa has had, there's been quite a bit of overshadowing, which has primarily come from the U.S. president and the delegation really adamantly and vehemently denying and disputing a lot of what they say is their misalignment on some of the priorities of the South African president. This year's theme for the G20 summit is solidarity, equality, and sustainability. And much of what we've heard from the U.S. President Donald Trump is that the U.S. does not align with this proposed theme. And so the concern here really has been what, if at all, involvement the U.S. will have in this year's summit. For most of the past few months, we've understood that President Trump was not going to be in attendance. We thought potentially Vice President J.D. Vance would make an appearance. And then, of course, we know over the past few weeks, President Trump said no U.S. officials would be allowed to attend this summit because of, some of the allegations that he has for what he believes are happening in South Africa. And so the concern here really is that a lot of this back and forth, seemingly between two bilateral partners, South Africa and the United States, risks overshadowing any sort of progress that we get from this summit. I should just update, though, that, of course, we did get an 11th hour, seemingly an about face over the past few hours that seemed like potentially we would get a U.S. official on the ground. Caroline Leavitt from the White House said that wasn't, in fact, going to happen. But as you mentioned, of course, the U.S. is going to host the G20 in 2026. So many people are wondering what, if at any, declaration and consensus will we get over the next few days. It seems like potentially the leaders that are here, and we should should mention there are quite a few who are still in attendance at the summit over the next few days, may be able to find alignment. Really what will be the big question, though, is whether or not the U.S. will continue to prioritize some of the recommendations that we see in the declaration if we do get that at the end of this weekend.
You know, Jen, as you pointed out, it's President Trump largely right in terms of criticism about South Africa and what he perceives as things happening there. Having said that, I'm looking at like our roundup and, you know, our weekly look at the region. You know, China continues to invest in, you know, places across the continent. Nvidia-backed Cassotis Technologies raising as much as $700 million to build and upgrade a network of data centers across Africa with AI chips. I mean, companies and other partners are there and continue to increase their presence. But you know this area. Talk to us about kind of what we need to know and who's there and what's going to go on at this summit.
Right. And Carol, I think that's an important point that you mentioned. Over the past few days, we had the B20, which is, of course, the corporate sector convening before the public sector convenes. And what they were telling us across the past few days that we've been on the ground is that they are all in alignment on many of the recommendations that was put forward as South Africa was the first African country to host the G20. Many of the priorities being getting a hold on debt, of course, high debt for a number of global South and emerging market economies, and also trying to find ways in which the private sector can actually support development amongst emerging markets. And so the corporate environment and the corporate private sector seems to be in alignment. The question will really be, what will the public sector be able to agree upon? Some of the sticking points amongst a number of these leaders, based on Bloomberg reporting, is this element of climate finance and what that actually looks like and what sort of participation will we see from some of the other countries. But we have heard, India's Narendra Modi is on the ground here. Emmanuel Macron is also here. Germany and Brazil's leaders have voiced their own support for a number of the initiatives that President Ramaphosa has put forward. And so, it was very interesting to hear from the private sector, who says it doesn't really matter what comes out of the G20. They are, in fact, in alignment, and they will help move forward some of these priorities. What, though, will the public sector be able to uptake and push forward will be the question. And the one thing I would add is that yesterday I was in the room with President Ramaphosa when he made the suggestion that potentially the U.S. was going to participate. And he said, throughout all this time, the U.S. has had a seat. They are always welcome to be a part of these negotiations. But the U.S. has vehemently threatened any sort of declaration at the end of this weekend summit. And so perhaps we don't see an official declaration. So maybe, in fact, the private sector is what drives these recommendations and this collective multilateralism, as it were, forward.
You mentioned President Cyril Ramaphosa of South Africa. We think back to the May meeting in the Oval Office, which our team at Bloomberg News described as a, quote, testy exchange. We all remember the video and images from that meeting. How would you characterize the relationship now between President Ramaphosa and President Trump?
Tim, it doesn't seem like it has smoothed over really at all. I think, again, yesterday we were in the room with President Ramaphosa and he had seemed, we asked him the question, are you surprised of this supposed about face by the U.S.? And he actually told us that he was surprised, which sort of goes to show just how tense this has been. We should remember that South Africa has been imposed 30% tariffs by the U.S. We, of course, know President Trump has been very direct in his opposition of what he appears to be happening on the ground in South Africa. But at the same time, what we've been hearing from South Africa, the South African president, and also the foreign minister who was at the Bloomberg Africa Business Summit earlier this week, is that they are sort of giving it back to President Trump in a certain way, and directly countering many of his allegations with direct facts on the ground, which is that crime is affecting all parts of the country. And so really the concern, and I'll bring it back to what I've been speaking to private sector and business leaders about, is that, of course, many of these other relationships are important to South Africa and a number of African economies. Yesterday, we saw President Ramaphosa next to Ursula von der Leyen of the European Union, but the United States is a key trading partner for South Africa, and so there needs to be some sort of way in which these two nations come together. And so it will be very interesting to see how this plays out and how we continue to see both of these leaders seemingly sort of jabbing back at each other in their own rhetorical comments. And so, yeah, I think I would still describe it as testy. It's just at this point, they're not in the same room. They're just across the world from each other.
Hey, listen, you mentioned some of the priorities of the G20. Just got about 30, 40 seconds here, Jen. One of the other things we're curious as we watch headlines crossing the Bloomberg when it comes to the Russia-Ukraine war. President Zelensky has said Ukraine risks losing its key partner after the U.S. threatened to cut off support unless Kyiv agrees to a peace deal that would force it to cede territory to Russia. President Trump has put out a deadline, although we know deadlines can move. As I said, 30, 40 seconds. What might we hear? Is this going to probably come up or possibly come up at the G20?
Carol, I think we should remember that there's a number of European leaders that are on the ground here. Ursula von der Leyen earlier today spoke about the fact that Ukraine would be a priority for these leaders that are meeting. And so it is without a doubt that we will continue to hear a number of these leaders express their own opinions on where this stands and where they stand. And we should point out, of course, that we did get a draft declaration potentially of what we could get at the end of the summit. And many of the priorities do touch Ukraine, including of course, the fact of critical minerals and countries not acting unilaterally. And so I feel like we should expect European leaders to continue to speak about this. Potentially, we'll continue to get some headlines throughout the day and also at the weekend itself.
You will be busy, as you often are, most times are. Jen, thank you so much. Bloomberg TV's Chief Africa Correspondent, Jennifer Zabasajja. She's also the host of Bloomberg Next Africa, joining us from Johannesburg, South Africa.
Well, shares of Nvidia popped to an intraday high just a little earlier, about 9 minutes before our program started. This on the report that U.S. officials are having early discussions on whether to let Nvidia sell its H200 AI chips to China. This is according to people familiar with the matter. It's a contentious potential move that would mark a major win for the world's most valuable company. We've got with us Bloomberg Intelligence senior semiconductor analyst Kunjan Sobhani. Kunjan, the H200, remind us, where does this chip fall in Nvidia's current lineup?
Yeah, so this is the prior generation, the Hopper generation's most powerful chip, significantly more powerful and faster than the H20, which today they are allowed to ship, but buyers are not lining up to buy that chip. Significantly higher ASPs than the H20, almost 1.5 to 2x higher. So a license for this chip would be huge for NVIDIA, as you pointed out.
Not the Blackwell, though. And I'm just curious about how powerful this is, right? We're in this AI race, this tech war, and nowhere is it felt the most between the U.S. and China. So how powerful an AI chip is it, and how much of it is it a win for NVIDIA?
I mean, if you put in context what China can buy today, it's a significant step up from the H20s. Right now, if we believe some of the benchmark comparisons, the H20 today is at par with the competitive alternatives that China has. So an H200 would be significantly better than any other chip they have access to today. Of course, not as good as the Blackwell.
How would you adjust your spreadsheet if NVIDIA is able to sell this chip to China? Like, how does it affect the company's earnings? And again, this is, our reporting at this point by our team, including Mackenzie Hawkins, is that U.S. officials are having early discussions on whether to let NVIDIA sell it. So this is not a done deal, but if NVIDIA were able to do this, what should investors understand about how much they'd be able to sell?
Well, there's two parts to this. There's one, their ability to sell, right? But there's also, remember, today they can sell the H20s, but they were not able to. It was just $50 million of H20s that sold in the quarter. And the reason being there is still that geopolitical friction between the two nations, and the China administration stands that they prefer their companies not buy Nvidia chips. So buyers are not lining up today. So there's one thing, if they do get a license, that opens the door for them to able to ship. But if the geopolitical tensions continue in disabling Chinese buyers from buying even the new H200s, then you're still not adjusting your models, right? I do believe that if they get a license for H200s, there will be some buyers who are on the fence who will have a lot more motivation now, because this is the fastest and the most performing chip they have access to. So we could see some rise in the sales in the China market. But again, that geopolitical tension needs to really ease, and China needs to open up the doors for their companies to adopt Nvidia chips.
Does it also show some sway, if you will, that Nvidia and certainly Jensen has with the White House? And I just think about this past week, right? There was a black tie dinner with Mohammed bin Salman of Saudi Arabia, and you certainly saw Jensen Huang there. We saw a lot of activity on social, pictures of him alongside Elon Musk, alongside others. And I just wonder, you know, it sounds like that Jensen Huang has a pretty good relationship with the White House. Is that fair?
From what we see, it would be fair. I don't want to speculate the sway or reach he has inside. But remember, this is the largest, most valuable company in the world. Second, it's at the forefront of the AI innovation, which now all major economies and regions have made their priority, that they really want to be at the center of that. So you would assume that it makes sense for him to be on all of those important seats that you just described.
Hey, before we let you go, Kunjan, you know, I'm wondering about the competition in China right now. And there's this debate that goes on. Okay, is it better to actually let Nvidia sell advanced chips to another country that might have restrictions on it versus not? Because if you don't sell the chips, then maybe it provides an incentive for China in this example to actually develop these chips themselves. Is there a view that you fall to one side on, where, you know, from the perspective of, okay, would China out innovate, or would China try to out innovate the US with access or without access to these chips? Does it matter?
It does not. I mean, if we just look at, instead of speculating, we just look at the past data, right? Whenever we have tried and limit their access to certain technological advancements, they have accelerated their pace of innovation in that area. There is definitely a thesis, but that by limiting the most latest advanced chips, you can slow down their path, but I don't think you can really shut them off. They have shown time and again, and remember, they have different resources, right? One of the key advantages they have is they don't have any lack of power, especially when it comes to green power, right? So the current chip solutions that Huawei has, while inferior to Nvidia's chip-to-chip basis, they can pool a lot of them together, even if it's inefficient, even if it's more cost and in terms of power, they don't care. They still are able to get comparable outcome and performance to generate AI.
Yeah. I mean, bottom line, it's a win for Nvidia, right? I mean, this is one of the things, just 30 seconds here, we talked about on the call, like they didn't have any business in China, so this gets them back into China. Potentially.
That definitely does, yes.
Okay. Like we said, Bloomberg exclusive, according to people, that this is going to happen. But
or no, they're having early discussions on whether to let Nvidia do it.
So, right. So it's still early.
It's still very early.
Like it's not happening yet, but this would be certainly perceived as a big win. We should point out the stock has been up as much as 2.2% today. It did certainly run up to its intraday high on this Bloomberg exclusive, crossing the wires. Nvidia right now up about 1.25%, Tim.
Hey, coming up in just a minute, a record number of people are expected to hit the road, rail, seas, and air domestically this Thanksgiving, which, yes, is next Thursday. So buy that turkey if you haven't already. Getting ready for it all, the new terminal at Pittsburgh International Airport. We're going to talk to the CEO in just a minute. First up, though, a check of the day's trade and top business stories. We have about an hour and 20 minutes to go until the close. Hey, Charlie.
Hi, thank you very much. And here's what's going on. Dramatically different tone to today's trading compared to this time yesterday when stocks kept moving lower. But right now we got the Dow, the S&P, NASDAQ, all very much in the green right now. Just talking with our Kunjan Sobhani all about Nvidia. Nvidia shares, they are pushing higher right now, helping advance the Mag 7 index. Nvidia right now up 1.3%. The Mag 7 index up 1.9%. The Dow, the S&P, NASDAQ solidly in the green. S&P just about the best level of the day at 6652, up 113 points, up 1.7%. The Dow up 771 now, up 1.7%. NASDAQ up 1.9%. Again, the Mag 7 bears repeating up 1.9%, and Nvidia up by 1.3%. 10-year yield 4.06%, with a 2-year currently yielding 3.51%. Gold up 0.2, 4,087 the ounce. West Texas Intermediate crude 57.96 a barrel, down 1.8%, and Bitcoin now down by 3%, 84,550 on Bitcoin. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie. Charlie Pellet's usually flying all over the world. I don't know that he's going anywhere this Thanksgiving.
He was last on a 747.
He was?
Yeah, just a few days ago.
Check out his Instagram feed. It's a lot of fun to track where he is. It's kind of like, where in the world is Charlie Pellet? Because he goes to some pretty cool places and loves planes, as does this one.
Well, speaking of planes, 14 years in planning and prepping, the construction and this week's opening of a new terminal just ahead of the start of the all-important holiday travel season. We're talking about the Pittsburgh International Airport. Just went through a major overhaul. A price tag of roughly between $1.5 to $1.7 billion, more than initially expected. Here with us to talk about it all, Christina Cassotis. She's CEO of the Pittsburgh International Airport. Christina, good to check in with you. We're going to talk about the opening. We've had you on a few times in the last few months as you've gotten ready for this. We're going to talk about that in a minute. But first, I just want to check in on capacity right now ahead of next week's holiday. What are you seeing at Pittsburgh International Airport, especially in the context of, well, flights being back at full capacity after that government shutdown?
First of all, thanks for having me on. It's always a pleasure to be here. And what we're seeing is that people are traveling and that travel is strong. Demand is strong. We are expecting record numbers for the Thanksgiving holiday, as everybody in the airline industry is for Thanksgiving this year. So we're ready.
You're ready. Well, you've got a new terminal for them to go through. Yeah. Tell us a little bit about it. And I wasn't sure, was it 1.7 billion? I think the initial thought was to be about 1.1. Tell us about the cost and tell us about the upgrades.
Well, first of all, 1.1 billion was the estimate at 0% design. That was never a budget. Okay. So let's just be clear about that. But I appreciate you asking the question.
It's kind of what I tell my husband when we're doing kind of a rehab. Honey, that was before. No, I'm just kidding. I'm just kidding.
That's fine. Just say that was at 0% design. I didn't really know what we were buying then.
That's fair.
So yeah, the final cost came in at 1.7. And we needed it. It has been a huge, that was for a terminal, a new garage, a new roadway system, a new customer service building where our rental cars are housed, and a whole lot of upgrades. So it's been fantastic. And we opened on Tuesday, November 18th. We switched over from Monday the 17th. A lot of planning went into it, and it was a seamless opening. We're really so proud.
How does it improve? Not just, the customer experience at airports is important, and
is it? No,
yeah,
yes.
It totally is.
I love airports.
It depends on the airport. You and I have been to some places that need upgrades.
Yeah, exactly.
We have. But, we know it pretty well here in New York because LaGuardia has, it went from being this pariah when thinking about airports to being a place that you really want to fly out of.
Yeah, exactly. Yeah. And it does change. Newark, the same thing. They've been redoing things. I mean, tell us about...
They could go a little faster at Newark. I'm just going to say.
It makes a difference. Listen, and you know this, you travel. Airports, I always say, airports are portals. You're going through them in order to go to something or from something that was really important to just you. it matters that the experience is good for you, that you can move through it without a lot of stress, and that when something goes wrong, it can get fixed. And so infrastructure has a surprising impact on how people feel about the space they're moving through and the services that we can provide in that space. So I'm really happy to hear you all understand that passenger experience is important. We understand it. Airports understand it. And I think we're all getting a lot better at providing it in ways that really deliver value for passengers and staff and meters and greeters and partners, everybody who relies on the airport. So yeah, that's what we built and that's what we opened and that's what we're excited to have people traveling through this holiday season and beyond.
Hey, Christina, the thing I care most about is it all being safe. I'm cool going through TSA. If I have to take off everything, I'm fine if that means I'm going to be safe. But I, not really. But I'm just saying, I appreciate those agents that were working during the government shutdown. Same thing with the traffic controllers. And I think that is something that Bloomberg has reported a lot on, about the lack of air traffic controllers that are out there and what's required for one to be one and so on and so forth. Tell us about that at your airport, what you're seeing, what could be better, what still needs to be done.
I love that you brought this up. So we believe strongly that if you don't get safety and security right, nothing else matters. I do want to point out that in that $1.7 billion worth of build, there was no loss of life. And I say that because when the original airport was built, 3 construction workers lost their lives building it. So having an owner's controlled insurance program, delivering a safety program for the construction while we operated safely and securely was job one every day. Our TSA partners, Customs and Border Protection partners, and air traffic control partners, we actually did not see major call-offs ever during the shutdown. We have an incredibly dedicated team out here. We have lots of people who helped out in making sure that they had food and diapers and baby formula and stuff that they could help their families with. We had a food drive, the food bank held a food drive, which we helped support. So there was a lot of care and taking care of our federal partners. And we reminded people every day to thank them. And we have had a very good partnership throughout the shutdown as we were getting ready to open. And I think that's a real testament to the dedication that they have to their jobs out here.
Yeah, I want to go a little existential with this because, during the shutdown, I was thinking, why is the FAA the employer of all air traffic controllers? Like, why aren't they employed by the individual airports where they work or the territory they're responsible for? In your view, is this the right way to have a centralized database or a centralized entity pay them and have centralized standards? Like, is this the right way to do it?
Yes, but I'm not sure that it should be. I think that there might be something to be said for how we take it away from the continuing resolutions. In other words, how do we make sure that they never have to shut down? Okay. So yes, I think you need the consistency and the handoff from tower to tower. You want the same standards. I believe in that, and I also think that the FAA does a remarkable job. They have a huge mandate, and there's a lot at stake for the work that they do. But I think that what we see is with the aging technology and some of the infrastructure, that it would be more beneficial if we could get those solutions, invested in faster, and that can't happen if you're subject to if you're subject to congressional budgets and stuff like that. So I think that there are other solutions that we can explore that have been successful in other countries.
Christina, just 15, 20 seconds. We need more air traffic controllers, just quickly.
Yes. Of course we do. We need more of them, and yes, we do.
All right. Are you flying this holiday season?
I am flying this holiday season, but I want to say that the skies are safe, and the air traffic controllers who are doing their jobs are doing a great job. We constantly need new entrants so that as people retire, we are replacing them.
All right. Amen. Have a good holiday season. Christina Cassotis, CEO of Pittsburgh International Airport. When we come back, a check on trading and stocks on the move. This is Bloomberg Businessweek Daily.
You're listening to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're coming up on the last hour of trading, getting ready to wrap up the day and the week overall. I'm very excited. I like the holidays are getting near. Was that too enthusiastic?
Well, I just want to remind you
that we're not done.
Yeah, that we still have work to do, Carol.
I know. Am I here?
You haven't ordered your pizza yet.
I have not ordered my pizza, but man,
but you're ready.
Thinking
You're ready.
about
Okay.
It.
Well, we got a little bit of work to do.
Yeah, we do. Hey, having said that, interesting trade today. I mean, pretty broad-based in terms of the buying. We're just rolling off, Tim, our best levels of the session.
Yeah, 468 stocks higher in the S&P 500, 36 now lower. Even with today's gain of 1.4%, where things stand right now on the S&P 500, just about an hour before the close of trading. Still down 1.5% over the last 5 days. The NASDAQ composite down 2.3% this week. Definitely
a certain narrative going on this week. I'm Carol Massar along with Tim Stenovec. Let's get to some stocks on the move on this Friday. Bloomberg TV markets correspondent Norah Mulinda is in the house. Ross Stores, man, it is an outperformer in both the S&P 500, NASDAQ 100. I think right now it's the number one gainer in both indexes.
Yes, it is the number one gainer, certainly in the S&P 500 right now, up for a record high. We see shares up as much as 8.3%. This is the biggest jump that we've seen for the company since April, and it's no surprise why they're gaining here. We're seeing a lot of consumers going toward a lot of the stores that are marking down prices or stores that are just more affordable right now. And if you think about Ross, it's definitely right at the center of affordability. And so we are seeing a lot of momentum here building into the holiday season here. We're looking at shares of Ross up about 15% though on the year.
Okay, I know you're thinking about Ross, Carol. I'm thinking about Nvidia.
What are you saying?
Well, I know Ross is one of your gainers today.
You're a chip guy and I'm a retail kind of guy?
No, but you know.
Not that there's anything
it is the
wrong
best
with
performer
that.
in the S&P 500, and it's one of your gainers today.
I'm just saying, what's Nvidia doing right now?
What is Nvidia doing?
Nvidia right now, looking at shares of Nvidia, NVDA, of course, is a stock that cannot literally leave our minds. We've been seeing it up, down as much as, more than 4%
I'm just going to tell
today?
you when I'm having my cup of coffee tomorrow morning when I wake up and after I've walked the dogs, I actually might not be thinking about Nvidia.
Just on a Saturday morning, right? Clear head.
Just for that moment.
Nvidia might not be on your mind.
Just
happy
saying.
for you then.
Just saying.
Good job with the boundaries,
But today,
Carol.
it's definitely, I am guarding.
You have to.
Yeah, that's good.
You have to. Well, we are seeing shares of Nvidia up just a touch, up about 0.4% right now. This is after we got some news, a Bloomberg exclusive, that U.S. officials are having early discussions about whether to let Nvidia sell its H200 AI chips to China. I mean, no final decision here has been made. That's what we're seeing from the reporting here, but it's possible that the idea remains an internal debate and never results in actual license approval. So it's going to be something that we have to keep our tabs on here. But I mean, shares of Nvidia up about 35% this year, but clearly really, really volatile this year as we're really digesting the results we got out of the company.
I feel like this is the week in Nvidia, right? It's like it rallies and it runs out of steam. It rallies, it runs out of steam.
Right.
That has kind of been the week. So it kind of explains, right, as we try to figure out this AI trade.
Still, we got Nvidia earnings earlier this week. We also got earnings from Gap, and shares are moving higher.
Yeah, we are seeing shares moving higher, actually for the best day since May that we're seeing for the company here. And this is a bit of the company bucking the trend that we've been seeing about a lot of consumers seeing caution in recent weeks as we think about just the broader retail landscape. But we did see some strength from Gap, particularly in terms of its celebrity partnerships that really helped to buoy the stock higher. Old Navy, Banana Republic, those both were strong brands for the company's performance. Athleta, though, not doing too well, but it does seem as though Old Navy and Banana Republic are what is pulling the company through.
Mary Ross Gilbert said Gap is back.
Gap is back, apparently.
In a big way.
She said like back to 90s level.
Oh,
Even though Tim and I were like, I haven't been in there.
But you know what? As we were having that conversation with her yesterday, which if you missed, that was Thursday. If you missed
Shame on you.
No, I wasn't going to say that. I was going to say you can check it out on our podcast feed.
Sorry.
People have stuff to do, Carol.
She's wagging the finger.
I'm a little sassy today.
I did think, you know what? We do buy a lot of Old Navy, actually.
Do
for the
you
kids.
now?
So
yeah,
then
for
you
the
do-
kids.
you're-
Yeah.
Okay.
So you're there.
It's the price is right, and these kids grow so quickly.
Yeah.
You know, they also, the sweatshirts disappear.
What do you mean?
They leave them at school. They're gone forever.
Oh.
Yeah,
Kids do
so
that, right?
that's
You're like,
pretty cool.
They do.
Where is that?
Yeah.
I don't know.
Doesn't matter if you put your name on it.
All right, Eli Lilly.
Eli Lilly, of course, this is a company that we've really been watching because it was.
Have we really?
I mean, I've been watching it today.
Did you know it was going to be $1 trillion market cap?
I came from the equities team, so I've been hearing some whispers that they were watching it all
right.
week. So maybe I had a head start. I did have a head start.
I was shocked.
Yeah, they've been watching it all week long, just waiting to see when it would cross that $1 trillion mark. But to your point, point, more broadly, I don't think that the average person was really watching this stock in that way. But we really are seeing this hitting the highest level on record, surpassing that $1 trillion mark, the first healthcare company to do so. And of course, one of very few outside of the tech space to really do so. Wow. And this is after, of course, the weight loss pill. We've been seeing a lot of optimism there. They're expecting it to reach $95 billion by 2030 here. And of course, we are also seeing that plan with Novo Nordisk to sell obesity drugs directly to employers. So, I mean, this stock is really doing some interesting stuff in a meaningful way. Yeah. Up as much as about, 2.2%. That's what sent it over.
Up almost 38% year to date so far. So really some outperformance. All right, Norah, thank you so much. For more conversations, check out our Stock Movers podcast. 5-minute episodes of the biggest winners and losers. You can find it on Apple, Spotify, or anywhere, Mr. Stenovec, that you get your podcasts.
Well, coming up next on Bloomberg Businessweek Daily, if you're sticking with us, we got a great program. We're watching everything out of Washington, D.C. That meeting between Mayor-elect Zohran Mamdani and President Trump that's set to kick off in just a few minutes. Also, we're going to get a view on the economy. Thomas Carroll is back with us. He's going to tell us everything happening when it comes to multifamily real estate and more.